This is the Southside School of Financial Freedom Watch List and Market Report for the week ending June 19th, 2021. Our question this week is, what is passive investing? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 1.58% on Friday and was down 3.45% for the week. The S&P 500 decreased minus 1.31% on Friday and was down minus 1.91% for the week. The Nasdaq decreased minus 0.92% on Friday and was down minus 0.28% for the week. Looking at the week, we can see that there were 3 up finishes versus 12 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. On Tuesday, Wednesday, and Friday, the 3 major indexes finished down. On Thursday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. The new unemployment claims were 412,000 versus 360,000 expected. U.S. housing starts rose less than expected in May. The Federal Reserve stated that they expect at least 2 interest rate hikes by the end of 2023. Mortgage rates shot higher after the Fed's comments about rate hikes. Commodity prices also dropped on the Fed rate hike news. St. Louis Fed President Bullard stated that the Fed could make its first interest rate hike in 2022. And President Biden signed a bill that will make Juneteenth a national holiday. New unemployment claims, U.S. housing starts, Federal Reserve announcements about interest rate hikes, mortgage rate increases, commodity prices decreases, Fed President's announcement on the timing of Fed interest rate hikes, and a new national holiday are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Please recognize that sometimes the powers that be will do something to push the market down. Notice how the market fell when St. Louis Fed President Bullard stated that the Fed could raise its first interest rate as early as 2022. Now we are at our question of the week. What is passive investing? Investing in a mutual fund, ETF, or stock that does not require you to sell or trade in the short term can be considered passive investing. It is a long-term investing strategy that does not require you to do much. You buy and hold. You do not sell, which would be active investing. People who passively invest generally add to their investment periodically, and they are not concerned about the day-to-day price movements of the stock, mutual fund, or ETF. Often, market index funds or ETFs are used as passive investments because they offer a degree of diversification, they have low fees, and they mimic the market's performance. Are you a passive investor? Do you own a market index fund or ETF? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it's not taught to you in school. So you're going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourage you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. However, you can learn how to be an investor if you simply start reading books about investing. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out the list of recommended books on the books page of the Southside website. These books will not tell you which direction the market is going to move, but you can learn how to make money in the stock market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending June 19th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Datadog Incorporated, ticker symbol DDOG in the first column. It increased 8.15% for the week, and it was up 1.49% on Friday. Datadog provides monitoring and analytics platforms for developer, information technology operation teams, and business users in the cloud environment. Looking at a summary of results, you can see that Datadog has increased almost 5% year to date. I did not trade Datadog this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. That is, be a passive investor. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comment section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 12.25% versus 10.98% up for SPY, a difference of 23.23%. The Southside is losing to SPY by almost 23.5%. The Southside is heavily invested in Bitcoin. The portfolio is 56.86% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 41.07% of the portfolio. Cash is 2.07%. The cash flow generated for this week was 0.74% of the portfolio account value. The account value changed by minus 5.4%. Meanwhile, the S&P 500 ETF SPY changed by minus 2.21%. I sold option contracts on 2 positions this week, 1 call and 1 put. That range from $401.70 to $423.37. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.